let me give it a shot on this topic, which I'm doing for the first time. I must admit that I'm doing this program on pricing specifically for the first time in the format of a program. Of course, I have advised people, or I have read a lot about pricing in last 2-3 years, and that somehow got my attention because I could really see when I was interacting with especially the small and medium sized business owners. One of the things that I observed, that pricing is one thing that is always kept out of focus. People always worry about improvements in the business. People always worry about making some small changes here and there. People worry about the sales and marketing aspect, and they spend a lot of energy, time, resources, number of different things on doing that, and nothing wrong with it. When you take up a business, of course you need to worry about the growth. Of course you need to take care of the improvement, the small little improvements that you need to do in your business. But pricing, like I mentioned in one of in my flyers when it was sent out, I think all of you must have read that. It is one of the most ignored aspect of the business, and this is what we are going to try and focus. And it is not going to be a one-way talk. Please try to interact as much as possible. Of course, our moderator Ravi has asked all of you to keep yourself in mute just to avoid any external noise. But if you need to speak, or when I ask a question, if you need to unmute, please feel free. Okay. We are just a small group of about 16, 17 people here, so it's not really going to create any havoc. So with that note, I would like to begin this program, and I would like to begin by thanking Pune Management Association, which has given me this platform. It has reached out to many of you. I know that there were lots of registrations, but only 17 of you could make it. But thanks PMA for giving me this opportunity. And this program is basically an initiative of two of the Center of Excellencies. One of them is entrepreneurship development, and another is skills development. We have 14 such different COEs. Those who do not know much about PMA. So let me begin my slideshow. What we are going to talk about is, we'll just touch upon very, very basic aspects of pricing. So maybe a lot of it would be a repetition for you. So if I bore you, please don't mind. Then we will just do a little bit of an interpretation of price as well as pricing. These two are, two different things. We'll also look at the pricing practices that are prevailing in the market. We probably will not be able to touch different practices that different businesses and different flavors of businesses are practicing, but I have tried to get kind of extract of what are the major pricing practices. We'll just talk about it just to enhance our knowledge. I also came across some of the myths, difficulties. I would also like to add some fears. There are some holding back when it comes to pricing. So we'll try to debunk all those myths and try to address some of the difficulties related to pricing. We'll then also look at what actually determines the prices. It is just the business owner, or is it just the the features, advantage, and the benefit part of the product, or is it something else? And then, of course, together with what determines the pricing, we will also look at how can we smartly act with the prices so that we do not lose out a lot. Okay, basically, I'm sure you must have heard about one very famous book which talks about don't leave money on the table. So when you are dealing, when you are trying to negotiate with somebody, or when you are in the process of striking a deal with your customer, don't leave too much money on the table is the message of that book. So in that sense, we'll try to look at some of the intricate aspect of the smart pricing. All right. So just basic definition of price. The price is nothing but its monetary value that a buyer pays in exchange of good or service. Now, this is a very simple definition, and we as a buyer also do the same thing, and we also seller as a as a seller we experience the same thing, that there is always a monetary exchange, because gone are the days when there was a barter system. How fair that barter system was, how good it was, probably is out of context now because it is no more in practice. In some little ways, it probably is there, that you do something for me and I do this favor to you. So in that sense, barter system is still prevailing, but in a very little way, and in a very, very minor scale. But mostly the trade in today's time is done only on the basis of monetary value that you are exchanging. And you are exchanging for a good or service that you want to buy. Then what is pricing? How price and pricing are different? Pricing is basically a process. It's a process where a business fixes the price of a product it sells. Okay, so pricing, you might have heard a lot of things around pricing. You might have heard about pricing approach. You might have heard about pricing strategy. But pricing per se is a process whereby it is the business which decides that, okay, for let's say for this bottle, this is the price that I am fixing, and I want to sell at a particular fixed price. So it's basically a process. Then what is smart pricing? Smart pricing is basically conscious and continuous approach of setting a price that serves the purpose of being in the business. Every business has a purpose, and in next slide we are going to look at slightly in detail. But basically, smart pricing is a continuous and conscious process. I just took an example of this bottle on my table right now, and I say that, okay, this bottle I want to sell, empty bottle I want to sell at a cost of 25 rupees. But can I live with that 25 rupees forever? And it is not just possible, because there are lots of different factors which we are going to look at are going to affect the price of it. And that's why in some or the other ways, you are anyway doing the smart pricing. The moment you adjust your price, because of some trigger, either you got a pushback from the customer because customer is not willing to pay the price that you have fixed as a business, then you adjust the price, maybe you lower down the price, or sometimes you feel that, okay, I need to probably raise by 5 rupees, of the same product I need to raise by 5 rupees. So whatever decision that you are doing, or changes that you are making, are basically because of uh, the degree of smartness that you have developed in a business. So it's not that none of you are not changing the price or not really consciously doing it in a smarter way. Today what we are going to focus is actually learning and understanding various behaviors, various circumstances which actually determines how we should be acting on that and how can we be even more smarter. So that's the focus here. Okay. So in last slide, in smart pricing, I just mentioned that it's a conscious and continuous process of adjusting the price which aligns with the purpose of being in the business. Now, uh, every business has a life cycle. Okay, and it starts when you start a new business, and especially as a small business, typically survival or at least a steady growth is something that is in your focus, isn't it? So that survival is a purpose of the business at that point of time. Or after you have secured or survival, you probably start thinking about now steadily growing the business and probably do number of other different things. Maybe you want to increase the product range, maybe you want to tap into a completely different geography, or you want to increase the market share in which you are operating, or where you have found some kind of comfort. So that's a growth that is happening. But can you do that with the pricing, or can you do that with the smart pricing, is something that we are going to talk about. Then purpose of being in the business is not always about surviving or growing. Sometimes people jump into the business because they have seen some problem around them. Probably you have acquired enough knowledge and skills, or a degree of wisdom, and you think that, okay, I can do a better I can provide a better solution here to eradicate this problem. And when you think that, you build a business around it. So it's a solution that you have found for the problem that you have seen or spotted around you. And now you want to solve a problem, and that's how you want to go about it. And you are in the process of building the business. So that also could be one of the purposes of your business. Once you are into the business, obviously one of the major focus, because no matter how much we talk bad or dirty things about money, end of the day, we all know it is the money which moves the mountain, and money really matters. So obviously you start thinking about maximizing the profit. So that also could be the reason or the purpose or your objective of remaining in the business or being in the business. Maximizing the sales could be one of the zaria, or it could be one of the methods through which you are achieving the other purposes. But maximizing the sales is also one of the desires that people have when they are into business. So that also could be one of your purpose of being in the business. Then like the second reason, like I said, solving a problem. Suddenly you have noticed that, oh, there are some social issues or environmental concerns, and again, using my skill, knowledge, and the experience, I can probably uh, make a business out of it. So that also could be one of the reasons. Probably you are not keen on earning the profit or maximizing the profit. You are not that greedy person who is actually looking for the profit, or you are not even bothered about your survival and growth, but you just want to come out with something, something really very beautiful, which actually addresses that environmental or social concern, and then you build a business around it, and that could be one of the purposes of your business. Again, going back to when you are, when you steady your ship in your business, in that sense you are doing reasonably well, then probably there is a desire to increase the market share. Now you are into the business, your survival is taken care of, you are steadily growing, but now there is suddenly an urge from somewhere, or maybe the market factors are pushing, sometimes your customers are pushing, and you come out with this objective or this purpose of being in the business, which is increasing the market share. And sometimes there is an inner desire which needs to be satisfied, for people like us, for example, those who are into, let's say, taking up the speaking assignment, we like that environment, we like to go out and address the audience, and we think, okay, this is something which actually keeps me on high all the time, and that is an inner desire. Okay, we always want to be in limelight, or we always want to really earn a good name, or some kind of visibility, or earning a high reputation, or getting recognized. Okay, all of these are inner desires, and that also could be one of the reasons of remaining, or running that business. But with all of that, I always believed, and this is something which I have observed, that no matter what you do, which business you are doing, all the businesses actually have a very common eventual or ultimate goal, and that goal is to serve humanity. No matter if somebody is manufacturing a soap, okay, nahane ka sabun bana raha hai, the purpose is to really provide a healthy life, let's say, because the soap actually helps you to stay healthy. Or somebody is manufacturing a product which brings a lot of happiness. Okay, you think of any business, eventually at the end of the day, if you do sort of a why analysis, you will come to know that, okay, at the end of the day, all the businesses lead, like in English they say, all the roads lead to Rome. Just in that fashion, all the businesses, the eventual objective or the purpose is to serve humanity, and that's how we are thriving, that's how we are growing. All right, but one question here, and you can either unmute yourself and answer, or you can also write it on the chat box. Either ways, does the objective or the purpose of the business remain the same throughout the life cycle, or it keeps on changing? I think I dropped you enough hint in the beginning. Or if you look at the first objective that
So,
I have just mentioned here. Yeah, please, go ahead.
yes. So the objective of business might change over a period of time. Sometimes initially, when you initiated a business, you initiated just to solve the problem of a certain group of people. After that, that becomes that passion becomes your career. Then earning becomes your main intention. So it might change
Right,
due course of time, in due course of
right.
time.
And for all good reasons, isn't it? Because at the end of the day, we all want to serve humanity. I mean, this may sound a little philosophical, but truth be told, at the end of the day, except terrorism, which is also an industry nowadays, every business serves humanity. Right. So I think, yeah, Harshada Haji has mentioned, yeah, it keeps on changing, and I agree with you. It keeps on changing, and for all good reasons. So when you are earning good enough, and then you suddenly develop that noble feeling in somewhere inside you that, okay, now I need to help society. I need to go out and I need to do something for the people. Sometimes I have heard business owners telling me that, I'm just running business so that, the 80 people who are working with me, and not just those 80 people, but their families are also fed. And that's why I'm, running this business. Otherwise, I have made enough money. I have secured my retirement. My children are not going to join this business. So there is no reason or motivation for me to run this business, but I'm just doing this. So sometimes that also remains the purpose of remaining in the business. But why are we talking about this purpose of business? Because pricing has some contribution. I'm not saying pricing is the sole factor of remaining or serving the purpose of the business, but pricing has a significant contribution to stay relevant in the business. Like Jaishil mentioned and Harshadaji has also confirmed that yes, it keeps on changing. Uh, uh, yeah, Ashimji has mentioned Google is an example. So yes, Google also is an example. And why Google? Let's not travel that far. Penetration. Of course, in this small talk, we are not going to have enough time to talk about different pricing strategies. There is enough material available on internet, and if you like, you can always connect with me. In fact, I have already shared one WhatsApp group link, and you can join me on that WhatsApp group, and we'll keep on sharing all useful material. So pricing strategy like price skimming, price penetration, discriminatory pricing, and there are a number of terminologies. We are not going to dive into that because we want to stay focused on the smart pricing. All right, so let's move further. So in this slide we are going to focus on price and pricing. We already kind of took a sneak peek on the definition of it. Price is a monetary value that you exchange in exchange of goods and sales, and then pricing is a process through which you are, as a business, you are setting a price or fixing a price. But let me ask you a question. Are you guys paying any price or cost to attend this program?
Probably yes. The time.
Exactly. Yes.
Yes.
Right. Right. So it's not really monetary exchange, right? But you are definitely exchanging something which can be measured, right? And you have given me your precious 1 hour. Again, thank you for that. But you are absolutely right. This is the cost that you are paying to attend this program. Am I getting any profit out of this program? You are paying in terms of time. I totally agree, humbly agree. But am I getting any profit out from doing this program?
Yes.
Okay. Can you spell that out?
Not directly in terms of monetary thing, but the connections, relativity, the brand building, the goodwill.
Absolutely right. Absolutely right. Yes. And that's the profit that I'm deriving, right? And that's the profit that all the people who are doing these kind of programs are deriving. Because like I said, one of the purposes, some people have that inner desire. They just want to, go out and share the knowledge, and maybe they want to be visible. They want to be in limelight, whatever it could be. So if that is satisfied, then of course that's kind of a profit, which again is not in a monetary term. You are not paying me in monetary term. I am also not getting any profit in monetary term. Okay, but we still both the groups are, let's say if I consider me as a group and you as a group, both the groups are benefiting from this. But let me ask you one more question, and there are going to be a few more questions here. Many of you think that I was doing nothing and I'm traveling. Ravi, can you just take care of people entering? Yeah, thank you. Many of you would think that okay, I was doing nothing this evening, this Monday evening. I had absolutely nothing to do, or somebody is traveling on the way back to home, and they thought it's really wise to attend this program because I'm making good use of time. So in that case, to you it is completely coming free of cost. So those who earlier said that, okay, we are paying or the cost to attend this program for us is time. For those who are making best use of available time, I mean, the people especially who are doing nothing or who are traveling on their way back home and attending this online meeting, for them, it's coming completely free of cost, right? What if I told you okay, pay me if you like this program, pay me whatever you like. And there are no hard feelings even if you don't pay me. What will you call that as? That is called as pay as you wish. right? And there are certain online businesses where people are actually practicing this pricing strategy or pricing model, pay as you wish. I download, some nice images, but some of those images you will see in these slides also. And what they are asking for is, if you want to pay, it's okay. If you don't want to pay, that's also okay. And what they are asking to pay is only 1 cup of coffee. And then, of course, 1 cup of coffee to the creator who has created that very nice, attractive, colorful, bright image. You are just, you just can pay only 1 coffee and not more than that. And that 1 coffee probably has, $1 or $1.50, because it's a US website. So you need to pay in USD terms. And that's how, they are running their business. And those models are very, very successful. I think, in 80s and 90s, some of the American companies tried, and they were really successful in doing so. What if I told you that, okay, you are going to hear something that you have not ever heard before, and I charge you, 250 rupees. Would you consider that as a fair or reasonable price for an online program, 1 hour on a topic which you have never heard before? Is it a fair or reasonable price?
Probably.
Probably,
That
yeah.
that depends on the value of the content given in that.
Yeah, correct. Absolutely. But I'm asking for 250 rupees ahead of the program. You don't know. Picture kaise niklegi, right? But so
Again,
before
depends on the risk appetite of the person.
exactly, yeah. Yeah. So there is a, now you are bringing the buyer's view, or customer's viewpoint, that how he is looking at it. For some people, 250 rupees is nothing. For some people, for 1 hour, 250 rupees, no, it's not really fair price. And what if told you that generally these kind of webinar actually costs 250 rupees? I charge 250 rupees for all my webinars, and but for this webinar, I'm going to charge you only 100 rupees. Then some of you would think, oh, it's a very low or economical price, right? It is something that can be paid. Some people will say, or sometimes let's say I say, okay, you can buy this program now, but pay me later. You have to pay. Okay, it's not pay as you wish. That, okay, if you don't like, you don't mind. I don't mind paying if you don't pay me, and there are no hard feelings. But here, there is a commitment. You buy now, but you can pay later. So I'm giving you a slightly a different, terms here in terms of payment. Have you heard about this? I'm sure most of you, experienced this. You buy now and you pay later. Then comes, if I say that I'm charging rupees 750 for this 1 hour session, but you think that it is slightly high, but it's okay, I don't mind paying for it. Then you call or label that price as a affordable price. Sometimes I say that, okay, you come to the program, it is 1,000 rupees, but if you bring along another person, so for two people, it will be 750 per head. And if you are working in a company and if you can bring along three or more, then per person, it will be only 500 rupees. So there is no further reduction. So whether it is 3%, then also it is 500 per head. Even if it is 10%, then it is still 500 per person. But if you come along, it will be 1,000 rupees. So it's a bulk discount. So this is also a terminology I'm sure people would have heard. Then pricing, something, you have heard a lot about pricing. Maybe you just watched one TEDx video, or some talks on YouTube, or you attended one program, and suddenly, the pricing, okay, I need to do something about the pricing, something I need to really work on it, I'm not working on this. So you have actually developed a lot of urge to do something about your pricing, and suddenly this program comes to you. And because it's most important for you, and you also got a very good content, you got some pointers, some key takeaways, and you had actually paid 2,000 rupees for this program. Would you consider that as a value for money? Yes, no? Now we are going one step further. Sometimes you think, oh, it's such an important topic. It really solved my problem. I was struggling for this pricing issue, this pricing rates for so many months, and nothing was really going in my way. But just because I attended this program and I implemented few things in my business, and that actually sorted out 80% of my problems related to pricing, or 80% problems related to my business, not just pricing, but also the business. In that case, for you, that program is priceless or precious. Now, let's talk slightly in an opposite way. You attended the program with a lot of hopes, but you didn't get anything out of this program. Then this program is absolutely worthless for you. Sometimes you think, okay, PMA is a good platform. I know Biman Gandhi, he has been talking about different topics. So both platform and the speakers are good, and I must attend this program. But you know what? They really charge very excessive. They charge like 5,000 rupees for such kind of 1 hour program, and it's really exorbitant. It's costing a bomb. I want to, I will, I know the speaker, I have great respect for the platform, everything is fine, but 5,000 is exorbitant. It should have been much lesser. So overpriced. That also is very similar to exorbitant price. Sometimes you think, oh, PMA is doing a lot of arrangements. Let's assume that this was a physical program and you attended this program, so there was a venue charge, there was a content charge, there were lots of nice ambience and everything. They really arranged this program very well. So I am sure it must have costed them a lot, and on top of that, some little bit of margin is fine. So what they have charged is kind of arm's length. This is also a terminology which is used. So you are charging on arm's length and you are okay to pay for it. What if I told you that generally I for this program I charge 2,000 rupees, but for my PMA members, for club members, I'm going to charge only 1,000 rupees. So that's an exclusive price. So now we are talking about interpretation about the price, slowly moving into the pricing methods that people use. Now I'm coming up with a exclusive price. Okay, sometimes people also charge premium. That my, if you attend my art of negotiation program, I charge 3,000 rupees. But pricing is my most important program. It's my flagship program, and I do it only once or twice in a year. So I charge premium for that. So this is also a pricing method or pricing strategy. Sometimes I bundle it. You attend my pricing program at 2,000 rupees or 3,000 rupees, and you get free entry in my art of negotiation program or some other program. So that is how people do bundling. Or there is a combo price also for commodities. There is a combo price which is. Then there is a dynamic pricing. Jaishil, you attend this program, but you enroll within 3 days. In that case, you get it at 750 rupees. But if you book after or enroll or show your interest after 3 days, it will cost you 1,000 rupees. So that's how, again, the pricing strategy or, sort of, chaturai yahan pe aati hai. Little bit of smartness also. So that is called as dynamic pricing. And we all have experience with the air tickets, right? They are following air ticket, air tickets are typically on dynamic pricing mode. And nowadays, I have also heard that, even railway tickets are also put on dynamic pricing for some premium trains. Then there is a limited time offer. This offer is only available in this window. So your availability, your convenience doesn't really matter. I am doing this program between this and that date. If you can make it, there is a limited time offer. After that, I don't know when am I going to do this program. So that's how people play with price and pricing. Any questions so far or any comment before we move forward? Okay, so again we are still on price and pricing topic, but like Jaishil mentioned, it depends on the person. I also saw a couple of messages on the chat box. There also people say it depends. So it depends on both buyer and seller. So let's look at it, pricing from a buyer's point of view. So there are broadly, there are multiple kinds of people, but there are broadly two kinds of people. Some people would say, for me, price matters the most. And normally we call them or label them as these are price sensitive customers. And then there are people who will also say, and you'll get surprised, I'm sure, you get very less number of people like, these who will say, I'm willing to pay the price if it really matches my value or the value that I want to derive. If it commensurates with the value, so they are the people who are value buyers. Okay, so these are broad categories of the customers. That's how they look at the pricing. From sellers, there are different ways. Sellers look at it. Price is a subjective matter. In this market, it works like this. For certain other market, it works like that. Bombay में ऐसे चलता है, दिल्ली में ऐसा चलता है. So sometimes, geography or the type of customers. If I sell my product to pharma customer, they are very choosy and picky about it. But if I sell it to let's say the machining industry, everything works there. So price is a subjective matter, is what sellers think. Then sellers also think sometimes that there is no one price that satisfies all, and it is true also. Everything that I'm trying to display here is obviously something that we have experienced. There is no one price that satisfies all, right? Some people are okay to pay price because they are not price sensitive. Whereas some people are not okay to pay that price because they are price sensitive. But remember one thing, somewhere in your business you will start realizing that pricing is one thing that actually helps you towards your purpose. So try to look at what phase of my business or business life cycle I am at, and what is my current goal, or at least my next goal or midterm goal. And if I want to achieve that, then it is this price which is helping me to move towards my goal. If it is not, then better you review your pricing structure and you revisit and do all the calculations and go back with the revised pricing. But it is pricing which actually helps you to go towards your purpose. And you will also realize that there are multiple objectives, whether it is increasing the sales, whether it is penetrating the market or increasing the market shares. All those multiple objectives can also be met with the conscious pricing. And when we say conscious and continuous changes in the pricing that you are doing, or the way you are doing your pricing, that's precisely what the smart pricing is. Okay, so let's quickly look at some of the pricing practices. Many a times, this is a practice that people follow, and especially the people who are relatively new in the business or have not really paid attention to the pricing aspect. They are the ones who think that it is the price that creates the sales or the most sales. It is, if I go with certain prices, which generally is a low price, that is creating the sales, whereas that's not really correct. The correct thing is, it is the price that creates the stable margin and also gives business a sustainability. That is the correct price. It is not the price which creates the most sales. It is the price that creates a sustainable margin, the stable margin, and gives a degree of sustainability, or in other words, profitable growth to your business, is the correct price. So you better look at how you are pricing, because pricing is also has a lot to do with the psychology. With what psychology? If you are operating out of your fear, if you are operating out of the awe of the market, and if you think, no, that's how it works, then probably it's a mindset issue. So it is better that you go back to drawing board and look at your pricing. Sometimes people think pricing is a numerical decision. It's a financial decision. And generally, and 80% of the business follow this, which is a cost plus. That I have these and that cost, and then I put overheads, and I put this and that gives me a basket of cost and cost plus, which is a margin. Here comes the price, and that's why it is a financial decision. So it's not really true. It's not really only about the number. Pricing is a business decision, because at the end of the day, it is pricing which actually determines the fate of your business. Then many a times people think that freebies and giveaways are win-win, because he gets something as a freebie and I get something in return as a business, and and then that creates a win-win situation, because uska bhi kaam ho gaya, mera bhi kaam ho gaya. That's not really correct. Everything that you offer, either as a freebie or giveaway, should be part of your strategy and linked with the objectives. So if you are giving away any freebies, then make sure that it is linked to an objective, that you are doing it with a purpose. Don't make it a generalized approach. I'm not against giving freebies, or later part we'll also discuss about the discount, which also could be part of your strategy. but do it with a purpose and don't generalize it. If you are, it's not like, दुकान के बाहर आपने 30% sale लगा दिया, then everybody who enters the shop gets that 30% off ka benefit. In that case, you are generalizing it, and then you are not really helping yourself. That actually is having a detrimental effect on the business. So next time you are offering the discount, be very, very careful, be very alert, be very conscious that who you should be offering the discount. It should be linked with your strategy, and it should also be linked to the objectives. Again, I'm not saying that you are not doing that. Those who are in the business, and Pradeep ji, Nana, we call him, he's into this business where discount and those things, because it's a commodity business, is very, very common, because every other next shop or every other competitors are doing that, and we'll talk about that also a little later. But Nana, if you want to add anything here, please, you are welcome to do that.
Yeah, definitely. The price structure always depend upon the market situation.
Yeah,
If I want to sell one product at one particular price, I don't think it will be continued for long period. I will have
right.
to review the market situation. I have to review the competitors' prices, and then again accordingly I have to change it.
Yeah, correct. Yeah, and we'll go a little bit more into detail, what all
Yes, yes,
what are the other things that you also need to look at.
yeah,
All right, thank you for your contribution.
yeah.
Okay, so let's look at some of the pricing myths and difficulties very, very quickly. The very first myth is, we go into the market and we kind of, sometimes, we experience, especially the people who have not, who have done a lot of market research. After, building the business, or let's say after building the product, they try to push that product or service into the market, and they face the resistance. You see that, it's not really going the way you actually had expected or desired. So those who have done a lot of legwork and a lot of market research start feeling that there are some market practices, and there are a few things that were not accounted for. We were not aware about it, and then you start accepting that, oh, it's a market norm, and better I need better I start following that marketing, or sorry, market or industry norm. And that's where you actually start losing out, both in terms of your margin and also in terms of your let's say the business aspiration. And I have seen several people, and especially the people who wanted to enter into commodity market, and this happens with the market which already has a is already in a oversupply mode. And you might argue that tell me a market which is not in an oversupply mode. Yes, it is true. If you want to, and especially again the commodity, you want to get into the market, you will see there are lots of people who are already established, and everybody has their fixed way of working. They have already ongoing very strong relationships, and it is very difficult to topple them, and it is very difficult to find my headways into that. But what you should be doing is, you should actually, and that's where the penetration price, which I talked about, is one of the strategies. People normally try to lie low and start with a very low price, because they think it's very easy to enter with a low price. But remember one thing, you need to do it with two things. Of course, you need to enter with a price which allows you a reasonable entry into the market, but at the same time, you should also make sure that it is actually not impacting your business, because low price means low margin, especially when you are at the beginning of the business. Obviously sustainability is an issue. If you are not sitting on a pile of cash which can support this strategy, then you are going to fall flat on your face. So you need to really be wary of that. uh, so when you do this, I would also recommend one more thing is that, okay, you go with a low entry, which allows, like I said, a little bit of an entry, some small headways. For example, let's say, again, I'm taking an example of this water bottle, and we all drink mineral waters. We all buy packaged drinking water bottles, which are 20-25 rupees, a liter. Uh, I'm sure you will be able to, recollect that, out of um, any locality where you are living, uh, there are already, let's say, there are in the locality where you are living, let's say daily demand is of 2,000 bottles, where people are buying on an average 2,000 bottles are sold through different vendors, and there are, let's say, 25 different players who are supplying these 2,000 bottles. out of which there are some international players, because there are international players also in this market. They are holding about 30-32% market share. There are some local, let's say state level player, they are occupying another 40% market share. And there are some regional players which are not known, not really a brand, not very known, but they are also supplying. So that is taken care by the rest of the players. Now, how do you really topple? But remember, everybody who entered into the market has actually taken away, not really necessarily toppled the competitor, but they have actually eaten away the market share. So 1% market share, if you take away from an international player, probably for them, in their bigger scheme of things, doesn't really matter. They are not really going to come hard at you and make any changes in their strategy or change their prices. But you are getting 1% market share. For you as a small business, it's a huge thing. So try to understand these aspects. And then also, when you are entering market with this strategy, penetration pricing, set aside a fixed time and a budget. That okay, I'll give myself 6 months to test whether this works or not. And in this 6 months, if I have an adverse experience, I will step out, back out from this strategy, not close the business. I'll back out from this strategy and I'll try something different. And there are many different ways you can do. So this is something that you need to keep in mind when you are faced with this myth, which is that the market has a set practice or industry norm. People think that if I need volumes, price have to be low. That's absolutely wrong. It doesn't have to be. There are many different ways to increase your volumes. There are lowering the price is not something that we are going to talk about, or is not something that I'm advocating throughout this program. You should always, look at what are those different ways. For example, it may sound too good to be true. Uh, it may be true for the business units which are able to really create volumes. So sometimes people, again, specifically the people who are starting the business having no capacity, or they have not even considered to expand their plant for next 2 years, they are operating with low volume and they are also keeping their price low. And what if the market really responds positively because of your low price, but you are not able to fulfill the volume demand? So that's a wrong strategy, right? You are doing something wrong somewhere. So this is possible to lie low, or enter into the market with low price when you have the larger capacity. So in that case, you actually narrow down your market and you only operate in that market where volume demand is something that you can reasonably manage. All right. I hope the message is clear here.
Yeah.
Yeah. Then the next thing that people think is discounts. Again, discounts are industry norms or industry practice. Just like the first reason. Yes, discount is something that everybody expects. You, me, as a buyer, also. We also keep on changing the role, right? So sometimes we are also buyer and we are also looking for discounts. We are always looking for something which is reasonably, priced. So there is nothing wrong with this, but it's not really, has to be accepted as a business that, oh, it's a industry practice, and because everybody is doing, I should also be doing. It's a trap, right? Like I was, telling to Nana that, when you are discounting something, you need to be very clear with your objective, and also attach a price tag to every discount. When I say attach a price tag to every discount, is, for example, and typically I have practiced this and I have successfully practiced this. If somebody tells me that, okay, your training fees are too high, okay, give us some discount. Even if they say it's not too high, they are still looking for, and typically the HR people, they are always looking for, and I'm not blaming HR people here, but they are always looking for something to be reduced, or purchase people also. Okay, sometimes I encounter those purchase guys also. But when I have to offer a discount because I want to make an entry, so that's my objective, it's my purpose, because it's a huge industry, I want to get some name, it's a long-term strategic goal, whatever. If I want to give a discount, I always attach, some price tag to that, which is like, okay, if you give me, let's say, if my cost is 35,000 rupees, okay, for a full day training, then I say, okay, you give me advance, and I'm okay to do this training in 32,000. Okay, so here what I'm doing is I'm turning something in my favor, and then in that process of that discussion or negotiation, I also, kind of gauge a person whether he's really interested, or is something which is, is a typical price sensitive, only looking at the price tag kind of person. If he says no, you do it in 32,000, we will not give advance. This is not our practice. We don't give advance to anybody, and this is the standard, answer that you get. And they always refer to the policy. Our company, we don't have the policy. Okay. Sometimes, if you are in a commodity business, you can also say that okay, I'm okay to give at a discount that you are and first of all, try to understand what kind of discounts they're asking for. So you can always ask that, okay, then buy more. Okay, you try to push little more volume. So this is also something that you can attach in return of the discount. So if they buy more, you are okay to give the discount. Again, in that process, you will understand whether the customer is sensitive to the price or he's just asking for the discount for the sake of asking. Sometimes in project business, you can ask for the scope reduction. Okay, probably he really has a budget issue. He's operating with a limited budget and he cannot go beyond that at his level. Then you can ask, okay, then remove these two items from the scope and I'm okay to give you what you want. So price is something that you want, scope is something that I'll give. Okay. Sometimes you can also ask for long-term contract wherever it is applicable, because people are from different background. Even relaxed delivery terms also is something that you can ask for. So every discount basically should be attached with something in return. All right. So next thing is people think there is only one way to price. Like I said, it's not really a numerical decision. It's not really always cost plus. There are many different ways to look at the price. Manufacturing a product or delivering the services with a transactional approach is not really a business, because you are then just because the people who are believing that pricing is there is only one way to price, they are always following this cost plus method. And then if I get this plus part, which is margin part, I'm happy with it. But then you are only doing one transaction, you are not really investing for the long term. So your pricing should be done in such a way, your overall offering, and when I say overall offering, it means a lot. It's not just selling a product or a piece of service. Okay, so try to look at that aspect also. There are multiple ways to really, like we have talked about bundled price, limited price, exclusive price, only for you, very premium price, whatever. So try to look at those aspects to really add a degree of smartness in the manner in which you are doing the prices. Then next thing is, you think that customer should pay this price because my product is really superior. My product has this feature, that advantage, it is going to save this, that, blah, 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 is what you think. It's not really what customer thinks. Unless and until customer is really on board with that thought, okay, this is something that I am willing to pay, then all the good things or every very nice excellent sales pitch is not really going to help you. So try to look at that aspect also. Sometimes there is a fear, like we already discussed about it. If I increase the price, I will lose. No, that's not really the case. You don't know how to really increase the price because you are operating out of fear. You are also operating out of comparisons, comparisons or what you see, observe, hear from the market. And then based on that, you say, no, there is no chance I can increase the price. It may be true in some cases. It's not really necessary in all the cases. And one thing that I really want to tell you here is that in reality, no customer actually knows the cost. Okay, they may have some fair idea that okay, metal ka itna cost hai, concrete ka itna cost hai, fuel ka itna cost hai, general महंगाई is running at this level, this that. They have fair idea, but the way you are actually building the product is not something that they are, even in their wildest imagination, they are able to come closer to the actual cost. So he is also throwing his dart in the dark. He doesn't know about the cost. And especially another case, the people who are trading, so they are buying from somebody and selling it to somebody else. They also don't know what the bloody real cost is. So when there is an absence of knowledge among the people that they don't know really what the cost is, why do you really operate out of fear? Okay. And even if you increase the price and if you lose, my recommendation is please lose that customer because it's not your customer. In a lot of networking meeting, we tell this to each other that if somebody is really price sensitive, probably he's actually helping you. He's your angel. He's helping you to find the right customers for you, the customers who are really willing to pay the price that you want to charge. Okay. So what determines the price? There are few aspects: market, customer, competition, costs, and other variables. And what do I mean by other variables is, um, there are certain costs associated which are not really part of your bundle price. So you have fixed the price of the product, which is, let's say, fair, well studied. You have applied all the learnings from this program and from the other avenues of knowledge. But then before customer really makes use of it, he also has to spend a few more bucks into that. Those are the variables, and you don't have control on that because you are just selling your product. So that is also something that actually comes in picture. And then of course the last thing is your profitability, because again money matters. So very quickly, I've got about 5 more minutes on each of these slides. Is that okay with all of you? Because I know I have overboarded, I've gone over in terms of time. Is it okay?
Most welcome, sir.
All
We
right.
are
Surely
learning,
that's
we are
fine.
Yeah,
learning
okay,
so
okay.
much.
It's interesting.
Yeah.
Okay. Okay. Yeah, I typically I try to keep it sort of a different than the general knowledge that you get from internet and all the other sources. So I'm trying to put in lots of my observation and experiences here. I hope you are able to realize that. All right. So first aspect, market. So what determines the price? One of the things, of course, market determines the price. Not that I'm saying or seconding that there are established market norms, but market in general there are. And when I say market, I'm not talking about the competitors. We are going to talk about the competitors little late. Okay. So what you should be doing is you study the market really well, because this is one of the factors that impacts the pricing. So as part of your smart pricing strategy, you should study the market. We talked about it, whether the market is already in an oversupply mode, then what is it that what is the different that I need to do? Also understand what are the market practices. I'm not again suggesting that you should follow the market practices. Sometimes you can do bits and pieces. In some cases you can follow certain market practices, but try to also establish your market practice. So, but for that to happen, you need to study the market practices. Also, try to figure out in the established market practices, is there any room available? Is there anything that I can really fill the gap, kind of is there anything which is missing where I and my product and my business can actually do a lot of value add. Also try to figure out whether customers are really happy or are they compromising just because they didn't have the option till date. Ola and Uber is the best example of it, right? All the issues and the troubles and the agonies that we actually face with the prevailing public transportation system in the metro cities, Ola and Uber have taken care of all of that. So they actually spotted, okay, these are the 1, 2, 3, 5, 10 issues, and they have actually built a complete business model around it, and they have changed the habit of the people, and that's why they are successful. We will not go into whether they are making profit or not. We will not get into other aspects of their business, but as a model, it has really been accepted really well. So what you should be doing, also study the market dynamics. Sometimes market also has swings, ups and downs. The prices in certain season goes down, and then it goes up. So there are different weather, different aspects which really impact them. There are external forces. So try to understand the market that you are targeting also has those dynamics. These really will help you to apply your smart pricing. So what you should be doing is find easy entry points in the market. So if the market is already in an oversupply mode, find easy entry points, and we have talked about it. Is it worth changing the market practice just because you feel there is a wrong practice? But if it's going to really cost you a bomb, then it's not really worth. So you should keep that in mind, and especially with your pricing. Okay, everything that we are talking is with respect to pricing. Then try to create a differentiator. I'm sure all of you heard about it. I'm not telling anything new here, that you should create a differentiator. Yes, every business, every product actually should have differentiator, but those differentiators differentiators are generally do not remain differentiator for a long period of time, because everything on these earth can be easily copy pasted. So try to create a differentiator in your overall customer experience, in your product features, something which is really, really difficult for people to copy. So in that sense, it remains a rare feature or rare differentiator. Okay, so try to aim for rare, not necessarily the unique one. And that's why I have not used the word here, unique differentiator. Then set aside a time frame budget with a clear objective, like market share, that I am doing this, pricing, I'm going ahead with this pricing with a pre-decided time frame and also allocated the budget to increase my market share. Then also offer unique proposition, but not necessarily a low price. Again, I'm not recommending a low price, but something which is really unique in your offering, which others are not doing. Okay, and then that can suddenly catch attention of the people really well. Next topic is customers. Sometimes people, and I have seen this, that there are so many customers and it's very difficult to predict customers' behavior, because it's at the end of the day when we say customer impacting the price or customers fixing the price, what we are talking about is customers' behavior and their motives, okay, behind a buying decision. So in that case, what you should be doing, because you have so many customers to really look at it. And let us play a small game here, a very, very small game. Can you count the number of dots? I'm going to give you only 7 seconds. 1, 2, 3, 4, 5, 6, 7. Any guess?
25.
Could not count.
Could not count. Okay.
I think it's 30, Viman.
30. Okay. Want to give another shot? I'll give you another 7 seconds. 1, 2, 3, 4, 5, 6, 7. Any revision, Nararji?
No,
Very difficult.
my answer remains 30.
30. Okay.
Somewhere around 30 to 35 only. Somewhere
Okay.
between 30 to 35, 32, 33.
Yeah. Now, you could not really look at these, or could not come out with a really correct answer, is purely because, one, they're all over the place. They are scattered, right? They are different in colors. Some balls or some circles have the white ring around them, and some do not have. So that also kind of, creates sort of an illusion here. So let me come out with a correct answer here. Ready? Now I'll give you only 5 seconds and tell me the correct answer, okay? Only 5 seconds, and I'll count now. 1, 2, 3,
32.
4, 5.
5 seconds भी जरूरत नहीं है. 5 also is not required.
So what made it happen here?
Very nice.
Means if it is organized, we can get the exact value of it.
But customers are not organized is a general feeling, right? Because there are, see, first thing is, in previous picture, you looked at all of them at once. So you are generalizing all the customers. But here, what I'm suggesting here is you group them, or kind of, try to see a pattern here. Okay.
So,
And once you see the pattern,
Viman, can I ask something? Are we talking about segmentation here?
yeah. So basically, for example, not really segmentation, because we are talking about customers' behavior and their motives behind
Right.
buying decision is,
Right.
who is price sensitive.
Mm-hmm.
In this category, people are very price sensitive. If I go to Hyderabad, तो सब लाला लोग है, कोई problem नहीं. So they are value buyers.
Okay.
If I go to posh, very posh community, probably, any price will work here. So basically, you try to define and, see a pattern, then
Okay.
categorize them, and then
Mhm.
filter who you can handle and who you cannot, right?
Okay.
It's not
Thanks.
always possible in your business. And in your business also, Narharji, in training business, for example, you will find these kind of customers, right?
Right, sir. Yeah.
And then accordingly, you shift your strategy. And then there are customers which are not really, something that you can handle, because they are absolutely nasty with their, preferences, with their unreasonable expectations and these and that, right?
Right.
So you filter them out. That okay, these are the customers I don't want to serve. I need peace of mind. I want to do this, and I want to do business with only this class. So basically, smart pricing is nothing but that. You filter them out, strategize for each type of customer, like price sensitive, value buyers, and situational buyers. Then create a compelling offer, but again, not a low price. Okay, and then focus on customer loyalty, because that is also one of the reasons to really give boost to your business. And then also create a compelling proposition in your business or in your offering, wherein they find it very difficult to turn away or say no to you. Okay, so that is what you can do with customers. The next thing is competition. So understanding and dealing with the competition. Like customers categorize competitors also. So try to see a pattern. Who are the international players, mighty players? They are cash rich companies. They can go any level, because if you are lying low in terms of price, there are competitors who will reduce a price by $2 or 200 rupees, and it will wipe you off. Okay, so there are players like that also. So try to understand who are at your level. So try to compete only with them, not with the mighty ones. Okay, you will fight with those mighty ones maybe 2 years later, 10 years later. Your focus should be, I want to make an entry into this business. My level is this, so I want to really look at those competitors who are at my level, and what can I do about it? What is their X factor? Okay, they are selling in the market. They have been there for 10 years, 20 years, or whatever. Or maybe they have very strong relationship. Maybe they have really beautiful products or whatever. So something is really compelling about them. So try to find out what is their X factor, and try to see what is your X factor. And then of course try to figure out is it really worth competing. So as part of smart pricing, penetration pricing does not always yield the result. So here, when you are entering into a world which is highly competitive, don't really get into penetration pricing, because it's very difficult to maintain a low price for a long run. And then deploy the right approach at right time. Now, when you are dealing with competition, again, this is something that you can read on internet. This terminology, frankly speaking, about 3 months back, I was not aware, but I really found it very attractive. Cooperative pricing, wherein you and competitor sort of know each other, and you are kind of creating a level playing field, and then you both are really going in the market with the similar pricing. Maybe 1,000 rupees here and there is fine, but you are basically cooperating with each other. So basically, you are maintaining the level. You are not entering into the price war. Being aggressive is a price war, wherein you will say, okay, if he increases the price by 200 rupees, I will remain at my price. Okay, or even if he reduces the prices, let's say he reduces the prices by 200 rupees, I will reduce by 400 rupees. Then you are really in fighting, and you are deploying this aggressive approach. But it may be required sometimes with the competitors who really do not want you to enter into that market. And then dismissive prices, wherein you are hell bent on your price, doesn't matter. But this is something that you can do only when your product, your delivery of service has a real good strength and customer is able to perceive it. Then in a competitive market, first focus should always be on building the market share where they are not reaching out or focusing. So in a oversupply market also, there are some loopholes, there are some pockets where competitors are thinking it's not worth their effort, so they are not sending their sales guys there, and they are not operating in certain geography, in certain markets. That is your beginning point, because it gives really a kind of a base level business to your base level income or revenue to your business, which is allowing you to sustain and slowly steadily grow. So try to focus on those areas where competitors are weak or they are not really focusing. You should be reaching out to those. And this is something that has really worked with a couple of my new startup companies where I'm coaching. One of them is in the spices business, and it has really worked out. And then, of course, focus on serving, not on selling. When you are entering into the competitive market, the attitude should always be of serving and not really selling the product. Selling the product should be the byproduct, just like a profit. And then, of course, you need to be patient, especially when the market which is overcrowded. Then cost and variables. There are some hidden costs. There are some invisible overheads. There are variables that impact customers eventually. I think I talked about it, so I'll not repeat that. So try to really do cost optimization. It's not always about numerical or mathematical equation where you come to the price only cost and then add some margin. Try to also reduce the cost, which actually reduces the price. Whether you offer that price to the customer or not, it's your business decision. Because sometimes you pass on the benefit of optimizations that you have done. Sometimes you want to keep in your pocket. But at least doing cost optimization is really, really important. Focus on efficiency and productivity, which basically helps you to produce more in less. Try to look at alternates or variables or alternates for variables. So variable is like I said, is not really in your hand, but then try to establish a complete supply chain with different alternatives to the customer, wherein you are able to kind of subside the ups and downs with the variables. Then of course innovation and continuous improvement, which is similar to what I talked about in cost optimization. And then keep on changing the challenging the status quo, and this is within the organization, whether it is related to efficiency, productivity, overall process improvement, anything that you can really uplift. All of this is actually going to help you save something somewhere. Then the last point is profitability. Can profit be a side product? If you ask me, yes, profit should always be a side product, because there are other targets that you need to achieve first, like acceptance of your product, raising the demand of the product which is accepted now in the market, and then talking about the market share. So before you really reach to a level of profit where you want to reach, you should actually focus on these milestones. All right. Then of course focus on sellability also. Every time you go in the market and you are not able to sell is purely because the way you have set the price, then makes it unsellable. So you should also focus on the sellability and understand how the profit works. I'll show you that in the next slide. So here is a slide that again I've got from internet. I don't remember the site, but I can share those with you later on. So there is always a break-even price on either side of an ideal price. So if you look at it, moving from left to right side of the price, where the price is increasing, initially you think, okay. So if you look at it, moving from left to right side of the price, where the price is increasing, initially you think, okay, increasing the price actually gives me a better profit percentage wise. As you can see, the curve is going up. Okay. But it hits the roof somewhere, which is called as an ideal price. After that, if you continue to increase the price, does not necessarily mean that it will always increase the price. It will now get a pushback from the market and the profit starts reducing if you continue to increase the price. And then you go back and decline to the level of break-even price. So try to figure out, this is actually something that you need to constantly study in the market, especially the people who are really playing in volumes need to constantly revisit their pricing strategy and look at what our ideal price is. Ideal price is something which gives you the maximum profit. All right. So develop a roadmap to reach the final destination, which is the profitable growth, but with the milestones like product acceptance, raising the market share, or increasing the demand. Give yourself a reasonable time for that to happen, and be flexible and open-minded for mid-course correction. Everything that you plan as far as your pricing is concerned is not going to turn true all the time. So give yourself some, or have some kind of flexibility wherein you are open to exert some mid-course correction if it is required. All right. My main presentation is over. I'll just quickly take about 10 seconds more before I end on some pricing gimmicks. And I'm sure you will enjoy this after this lengthy lecture. This is what Parle did. They kept the price at ₹5 even as on today. I'm not really a big fan of Parle-G biscuits. I don't eat biscuits, but I know that they are still keeping the price. But you look at this, what they have done. They kept the price. It's kind of an attraction. It's a catch as far as their consumers are concerned. But they have reduced the volume, the quantity that they are serving. And I'm sure you probably have seen this picture somewhere, either on LinkedIn or other social media. Another gimmick is very interesting. I really like this. these chips that you get, or French fries. There is a small cup which is offered at 35. There's a medium cup which is offered at 55, and the third one is offered at 70. The difference between small and medium, the price difference is 20 rupees, whereas medium and large is only 15 rupees. And you know why these three sizes are offered by the smart pricers? Anybody? Where are they making better profit here?
So that they should be pushed towards buying this 70 rupees wala.
Exactly. So that 55 rupees wala cup jo hai, medium wala, is only as a placeholder to push the sale of large. So it's again, they are playing with the psychology of a buyer. Buyer thinks that I get, large in 70 rupees, just paying 15 rupees extra. Sometimes they even reduce it to 60 rupees just to encourage consumers to buy. And in that 60 rupees also, they are making profit, and actually a very good profit. And that's how they all calculated, because their processes and, their cost structure and everything is so set. It is so standardized. They are still able to make a very good profit on large. So here they are pushing large volumes, okay, at a 60 rupees price, but that 55 rupees is only, there to push the price of the volume, the quantity. This is a very famous thing. I am sure you must have seen this. Now here, what's happening in this picture is, and this is purposely, they do it. They hang a, shirt saying that it's a new arrival, very bright one. It looks very fresh, nice color, and the price tag is 799. But very next to that, in the next counter or very next to it, there are two t-shirts which are hanging, coupled together somehow, maybe in the same hanger or some arrangement is done. And it is titled as pack of two, but available at 599. And here again, what they are doing is they are trying to get rid of their old stock, which probably they were not able to sell. They have bundled it now, selling at 599 as a pack of two. Again, they are making profit. They are not, selling you raddi mal. Of course not. Okay, that's not really no cheating is happening here. But again, this new arrival is actually giving a push to the pack of two. All right. So with that, I end my presentation. I think I really took a lot of time, 30 minutes extra. Yes. Oh my God. But all those who have survived so far, thank you so much.